Hello and happy Friday, everybody. This is Brian McCarthy at Story Residential in Hoboken. Today is Friday, March 11th, 2022. And today I'm going to be talking to you about two main topics with a little bit of, additional stuff on the side there as well. But the two things I really want to go over today are, number one, I want to bust the myth that's going around right now that there is no inventory, because it's absolutely not true. And I have the stats to prove it. And the other is some cool data that I came across where we compare what home price appreciation has been compared to, the 1 year, looking back 5 years, and looking back 20 years across the United States. And then I have a few local stats to go over real quick as kind of a teaser for next week, and home equity and comparing net worth for people that rent versus people that buy. So a few other topics, but before I get too off subject here, I want to launch right into it because I want to keep this relatively short today. So let me share my screen. All right, here we go. So your market monitor for this week. Let's talk about home prices. So price appreciation is accelerating nationwide. New Jersey and North Jersey is not any different. If you look back over the past year, compared to just the end of January here, it's gone up every single month. And in January, ended at 19.1% average appreciation or for your average home there. Changes in prices. Okay, here we go. We're going to talk about 1 year, 5 year, and 20 year. So in the past year, so the end of Q4 of 2021 compared to the year previous. If you look here on the side, New Jersey's appreciation was 15.4%, and it's made it into that kind of darker blue legend color compared to a lot of the states around us, which is pretty awesome. And then some of the trends that you'll see here as we look back are Idaho is really blowing up over the past couple of years, surprisingly to me. Not surprising is Florida. But the national average is 17.5. New Jersey is just under that, but still at 15.4. Very good, very strong. Over the past 5 years, New Jersey coming in at 45.1%. I mean, it makes me think about it was over 5 years ago now, but there was a place right around the block from where I live, 700 Bloomfield, which was just down the street from where I lived before. Because yes, when we moved, we just went around the block. But that went up for sale right when I started real estate, like 8 or 9 years ago. And I wish I had bought it. There was one other offer on the table, and we just chickened out because it sold for like $500,000, and it just sold for the second time since that transaction last year for like 750 or something crazy. I mean, I gotta look back at it, but anyway, just an anecdote there for the past 5 years. New Jersey, no different, 45% increase there. Florida, 72. And then look at Idaho out there on the West Coast, 118.2%. What do you guys got out there? Educate me, please. I'm very curious to know. I know very little about Idaho. Except Sun Valley and the skiing out there. What's up, Uncle Gary? Hope you're well. Changes in prices since 1991. So this is looking back 20 years, everybody. New Jersey up 218.8%. 20 years ago, I wasn't around in Hoboken. But if you were, or you knew anything about it, it's come a long way. Jersey City and Hoboken and some of these surrounding areas looked completely different. And I should have, I'm going to actually start posting on my social on Instagram here this weekend, because it just made me think about some of the photos I've seen from like the 80s of this area. Some of them are pretty funny. So if you don't follow me already, my handle is @BryceSays on Instagram. And I'm going to post some good stuff thinking about the 90s here around the Gold Coast. But anyway, New Jersey, 218%, national average, 258%. Don't be concerned that New Jersey is a little bit lower than the national average just on that 20 year, because the past 5 or 10 years, it's come a long way. Colorado, where I'm from, almost, I guess it's in second place with 534%. Pretty amazing. Just next to Utah at 556%. All right, let's switch gears a little bit talk about the home price forecast. So that was looking back. Let's look ahead now to 2020. So polling 7 companies that are entrenched in the housing market and have been for a long time, the average of those 7 forecasts was 6.1% for, home prices and appreciation over this next year, over 2022, which is pretty awesome. No one was under 3%. No one was in the negatives, which is great if you bought recently or are going to buy recently. That's just built-in appreciation and equity in your home. Let's talk about some supply and demand. So if you didn't know already, this is kind of a chart of what we call absorption rate. So, seller's market is anything less than 6 months, and the absorption rate basically goes 0 to 12 for the number of months. So, 5 and below is fast absorption, a seller's market. Neutral market is like the 6, 7, and buyer's market is more than 7 months. So that means if nothing else came new on the market, it would take that long to absorb the inventory that we currently have. Where are you right now? What if you keep an eye on the market? What do you think? What do you think we're in right now? I would say we're in this blue seller's market. Average days on market nationwide. The only place we don't have data for is in North Dakota, but nationwide, average days on market is in that 15 to 30, or up to 15 in Alabama and Alaska and Hawaii. Things are selling super fast nationwide. So that would be in the 1 or below 1% or percent, just number, I guess. If you were to put it on the absorption rate, it'd be like a 1. New listings falling dramatically. So this is just kind of preface one of those points, or the myth busting that there's no inventory. So, okay, number of new listings, it generally goes up, and this is just looking back 1 year. But if you look at the trend year over year, it basically does this pretty steadily. So as we know, the spring and summer market are usually very busy, especially in our area. Kids are not in school. It's a good time to move. Generally more like, half day Fridays and vacations and stuff that you can skip if you're looking for a place, and you can move on those weekends or those half day Fridays. But anyway, yes, new listings are falling, and they have been since the end of the year. This only goes to December. They are back up here in 2022, and it's 2022 is pretty much going to follow the same trend. Although I will say Q1 of this year started off stronger than we expected. There were more listings, but if it feels like active listings dropping, most of it has to do, in my opinion, with things that come on the market that are priced well, and that means like at market or maybe slightly above or below, are just going so fast that active listings are just dropping off very quickly. Where was I going with? Okay, yep, I'm getting there. Okay, I'm gonna bring this point home soon, I promise. So one of these worries, and I talk about this almost every week when I go over these charts, these slideshows like this, is a housing bubble. I hear it every once in a while, and we saw it a lot in the headlines this time last year. Oh my gosh, what if this is like 2007, 2008 all over again? Well, if you poll consumers versus agents, a lot of agents believe and know that we're not dealing with the same set of circumstances. Don't believe that there's, a huge bubble happening. There might be a little bit of this in appreciation, but if we look at all the stats we've been looking, take into account all the stats that we've just been looking at, appreciation for the rest of the year is going to remain strong. And a lot of agents feel like this bubble probably isn't quite a bubble that's going to burst, like a lot of the consumers think. So let's look at inventory here and also what loans are doing. But first, let's look at inventory. So inventory in homes is nothing like that the last time. So you have here in the orange, 2007, 8, 9, and 10, which is like during and right after the crash. And this is what the inventory looked like for like months of supply of existing homes. So places that came on the market stayed there for a long time because not a lot of people could afford them anymore. People weren't getting approved for loans and so on and so forth. The last 4 years, it's gone down. Since 2018, into 19, 20, and 21, the months of supply or that absorption rate is steadily gone down. Things that come on the market get snatched up very quickly. That's what that means. All right, so existing home sales here. This is, this chart to me is the biggest myth or biggest buster for that myth that there is no inventory. Because if you look here, and this doesn't even take into account new development. Okay, this is existing home sales. So this is like you bought a house, you're the first owner or the second owner, and you resell it. It's not a new development, it's a resale. It's an existing home. So that number has gone up steadily for the past 3 years and even into 2022. So in 2019, we're at 5.3 million. 2020, we're at 5.6.5 million. This last year at 6.1. So the number of homes selling keeps increasing. They're just getting snatched up very, very quickly. And that's a point that I just keep saying, but that's it. Like if you're out there and you're looking and you feel like there's no inventory, you're just not looking at stuff fast enough. Like you really need to have, if you're a buyer right now, you need to have a drip, or you need to be looking at listings every day if you're serious about it, and seeing that listing very fast. And of course, being already ready to go with the pre-approval so that you can make an offer on the spot for a place that you like, because chances are it's not going to be on the market for very long. So here's another chart looking back. If we want to go back into that sentiment about this being a housing bubble. So this is the volume of loans in billions for people that were getting approved with a credit score less than 620. If you're looking at a scale of prime loans to subprime loans, 620 and below is like, obviously subprime. The prime is going to be 760 and above. That's when you get the best rate. That's, you're an A plus, prime borrower. And then it goes down in tiers by the 20 points on your credit score. So the next tier would be 740 and then 720 and then 700. So net worth, this is another cool thing, a stat that I found that I just want to, go over real quick here. So if you've been renting for a long time and you're thinking about buying, I highly encourage you to do so. This is the average net worth of a homeowner versus a renter. Homeowner, the biggest difference being that, when you make a purchase of a home, you're investing in something very big, very worthy, and you are constantly gaining equity. Every time you make a payment, anytime that you want to overpay and put another payment in there, or if you're just making payments and going along, you're getting equity in your home. And if you've owned anything for the past several years, or you buy something now and it keeps projecting as it is, with home price appreciation going up for the rest of the year and into the future, you're gaining equity. Your home, your investment is gaining value, and so when you do cash out, if and when you do, it just increases your net worth. Whereas if you're just renting, you don't see that money again. You're paying someone else's mortgage, paying them back for the investment that they made. And you have a place to live, but every time you make that rent payment, it's not coming back to you in any way. So yeah, that just illustrates the net worth. Typical net worth of a homeowner is about 40 times that of a renter. And I know I do a lot of quotes, so I just have a quick one here today. So this is from NAR, National Association of Realtors. While the booming housing market contributed significantly to the recovery of the U.S. economy, research has consistently shown that homeownership is also associated with multiple economic and social benefits to individual homeowners. Homeownership has always been an important way to build wealth. Couldn't agree more. And lastly, I'm just going to end with this slide. So every quarter, I do new buyer and seller guides. I have like a very in-depth one, and then I have one that's just kind of high level. If you have never bought or sold before, or it's been a while, or you're just curious what goes into it, what the transaction looks like, what the market is like in your area, and what you can expect, these are completely and totally free on my website. If you're watching this on my Wix site, there is a tab right there for resources. Click right in that, or if you're on my Compass website, There is a tab there for resources, and they're in there, and you can literally download them for free. I'm not even asking for your name or email or address. I want you guys to have these. So, if you don't have access to it or you don't see it, just drop me a line, and I would be happy to share it with you. So that's all I got for that today. I'm just going to give you, before this gets way too long, because I was little long-winded today. These housing reports came out for January that we put together every month. I'm going to be going over these a little bit more in depth next week, so you can hold tight. But if you can't wait, if you love this kind of information like I do, just drop me a line. I'd be happy to share them with you. I'm going to send this out in an email. So if you're not on my email list, please do sign up. But you have access to this screen, basically, and all these stats here. If you go back, we can do it by individual reports. Every single city in New Jersey gets updated every month. So, what I'm going to go over next week is downtown Jersey City, the Heights, Journal Square, West New York, Jersey City as a whole, and I have Hoboken's as well. I like looking at Hoboken. So feel free to freeze frame and rewind if you want to check those out now. Otherwise, I'll be going over them next week. As always, guys, when you have questions, concerns, you want me to talk about something specifically in my next video, always happy to do so. Just call, text, DM, email me, whatever, just to get in touch. My email is brian.mccarthy@compass.com. My cell phone is 617-851-9141. And my Instagram handle is @Brisays, Brisays. And hope you all have a great weekend wherever you are. And I will see you same time, same day next week right here on the Market Monitor. Take care, everybody.